Ever feel that like knot in your stomach when you watch, your investments just plummet?
Oh, yeah.
Or like the opposite, that rush when you're chasing
Yeah.
the latest, hot stock tip or something.
The adrenaline.
Yeah, totally. I think we've all been there.
Absolutely.
Today we're diving deep into the psychology of investing.
Okay.
Really how fear and greed can totally like sabotage our financial goals.
It's it's really fascinating how these like primal emotions, fear and greed,
Hmm.
when you amplify them across an entire market, they become these driving forces that
Yeah.
create both opportunity and chaos.
Right. It's like we all become part of this collective emotional roller coaster.
Yes.
And sometimes it just takes us for a wild ride.
Oh, absolutely.
Um, so I guess like a prime example,
Yeah.
think about the panic selling during the 2008 financial crisis,
Oh, yeah.
or even more recently, like the crypto crash.
Yeah, we saw it happen.
Fear takes over, right?
I-
Everyone's rushing to sell. They lock in those losses instead of maybe, riding out the storm a little bit.
They get scared and they gotta get out.
Yeah. And it becomes like a self-fulfilling prophecy.
It really does.
And then you've got the flip side. You've got greed.
Oh, yeah.
Remember the Bitcoin frenzy back in
Oh,
2017?
I remember that well.
Or the GameStop saga?
That was a wild ride.
People just ignoring the risks, totally chasing the quote-unquote next big thing,
Yeah.
driven by that FOMO,
Yeah.
fear of missing out.
Exactly. And what's interesting in those cases is how the herd mentality just takes over.
Totally.
You see other people making a fortune and you feel compelled to join the crowd.
Yeah.
Even if logic is telling you to maybe, be a little cautious.
Yeah, and I think that's where like understanding behavioral economics comes in.
It's so important.
It's not just about the number, it's about understanding those psychological biases that influence our decisions,
Absolutely.
like loss aversion.
Yes.
The pain of a loss feels so much stronger than the pleasure of an equivalent gain.
It does. And that's why fear is so paralyzing for so many people. Because we're wired to avoid losses, even if it means missing out on potential gains.
Yeah, so how can we even start to like recognize
Right.
when fear is hijacking our decision making?
It's a good question.
What are some signs?
Yeah, well, I mean, do you find yourself selling off investments the moment the market dips,
Oh yeah,
convinced it's just going to plummet even further?
let's go to zero.
Or are you avoiding potentially lucrative opportunities?
Right.
Even when the data looks really promising because you're just so afraid of losing money.
Like what if I'm wrong?
Exactly. And those are all classic signs.
Yeah.
And it's important to remember market fluctuations are normal.
Mm,
Trying to time the market perfectly is nearly impossible.
totally.
And it often just leads to more emotional decisions.
So we talked about fear, but greed can be just as dangerous.
Oh, it's like the other side of the same coin.
Totally. It's like we put on these rose-colored glasses.
Yeah.
We're convinced an asset will only go up
Up and to the right.
forever and ever.
Yeah.
And we just ignore those red flags.
Absolutely chasing those hot stocks or cryptocurrencies without really understanding the fundamentals.
Mhm.
That's essentially gambling, not investing.
Right.
And it's often fueled by this illusion of easy money
Totally.
and a very distorted perception of risk.
So how can we start to like tame these emotional beasts
That's the big question.
and make more rational decisions?
Well, first, I think it's crucial to just acknowledge that fear and greed are natural human emotions.
Okay.
We can't eliminate them,
Right.
but we can learn to manage them.
Okay, that makes sense. So what are some like practical strategies
Right.
for conquering fear when it starts like creeping in?
One of the most powerful tools is focusing on the long term.
Okay.
Remind yourself of your investment goals.
Mm-hmm.
Why are you investing in the first place?
Yeah, what's the big picture?
Exactly. Is it for retirement?
Mm-hmm.
Is it for a down payment on a house?
Yeah.
Your children's education, whatever it may be.
Yeah, once we zoom out and look at that big picture,
Right.
we can see that historically markets tend to trend upwards over time,
That's right.
despite those short-term dips and fluctuations.
Exactly. And that long-term perspective can really help you ride out those inevitable market storms without making impulsive decisions based on fear.
So it's like having a compass to guide us even when the seas get rough.
Precisely. And speaking of tools,
Yeah.
another powerful weapon in our arsenal is knowledge.
Okay.
The more you understand about the market,
Wow.
the less intimidating it becomes.
So we replace the fear of the unknown with informed confidence.
Exactly. There are so many resources available.
Like what?
You can start with reputable financial websites,
Okay.
books by respected experts, even online courses.
Mm-hmm.
The key is to find sources you trust
Right.
that resonate with your learning style.
Yeah.
You don't need to become a financial guru overnight.
Totally.
It's about building your knowledge base gradually over time.
And as we learn, we start to see those market fluctuations.
Yes.
Not as like threats, but as potential opportunities.
Exactly. And another key strategy for conquering fear is building a solid safety net.
You mean like having an emergency fund?
Exactly. Knowing you have that financial cushion to cover those unexpected expenses can give you the peace of mind to stay the course.
Right.
And ride out those market dips without panicking.
You don't have to sell at a loss just to make ends meet.
Exactly. It takes the pressure off.
Yeah.
And allows you to make more rational decisions even when things feel uncertain.
Okay, so we've covered some great strategies, I think, for dealing with fear.
Right.
But what about taming that greed monster?
Oh, that's a tough one.
How do we avoid those impulsive, FOMO-driven decisions that can lead to regret later on?
Well, one of the most effective ways is to have a clear plan in place before you even think about investing.
Okay.
This is where discipline becomes absolutely crucial.
So what does that look like in practice?
Well, for starters, you need to predetermine your entry and exit points for each investment. For example, you might decide to sell a stock if it gains 20% or
Wow.
drops 10%.
Gotcha.
Having those predetermined thresholds helps take the emotions out of the equation.
Yeah, it's like setting up guardrails
It is.
for our investments,
Yeah.
preventing us from making impulsive decisions based on greed or fear.
Exactly. And another essential strategy is diversification.
Oh, yeah.
Yeah, tell me more about that.
Don't put all your eggs in one basket,
Right.
especially if that basket is a trendy but potentially risky asset.
Mm-hmm.
Spread your investments across different asset classes,
Okay.
industries, and even geographic regions.
Gotcha.
This not only reduces your risk, but it also forces you to think more strategically about your portfolio.
It's like building a well-balanced diet for our investments.
I like that analogy.
Make sure we're not overexposed to any one particular sector or asset.
Exactly. And finally, when it comes to taming greed, it's crucial to set realistic expectations.
Okay.
Not every investment is going to be a home run.
Right.
Focus on steady, sustainable growth.
Rather than chasing those elusive jackpots.
So it's about shifting our mindset
It is.
from trying to get rich quick
Right.
to building wealth over time through informed decisions and patience.
Precisely, remember, investing is a marathon, not a sprint.
I like that.
And slow and steady wins the race.
Now, before we move on to like some specific tools
Okay.
and techniques for staying disciplined,
Yeah.
I'm curious,
Yeah.
what are some of the things you've learned about yourself as an investor?
Oh, that's a good question.
Have there been times when you've recognized those emotional biases creeping into your decision-making?
Oh, absolutely. I mean, I
Huh.
remember when I first started investing, it's like we're peeling back the layers of our own financial psychology, trying to understand the forces that drive our decisions.
And that self-awareness is so crucial
It really is.
because once we can like identify those patterns,
Yeah,
we can start to develop strategies to like counteract them.
right.
So we've talked about like the importance of having a plan, diversifying our portfolio, setting realistic expectations.
Yes.
But are there like any specific tools or techniques that can help us stay disciplined and avoid those emotional pitfalls?
There are a few. One powerful tool that can really help us combat fear is the stop-loss order.
Okay.
Have you ever used those?
I've heard of them, but I haven't really like explored how they work or anything.
Okay, well, they're actually quite simple. A stop-loss order basically instructs your broker to automatically sell an asset if it drops to a certain price that you set.
Oh, so it's like a safety net
It
that
is.
prevents us from losing more than we're comfortable with.
Exactly. It takes the
Yeah.
emotion out of the equation because let's face it, when we see our investments dropping, that fear can really kick in.
Oh, yeah.
And we might hesitate to sell, hoping it will bounce back.
Right.
But a stop-loss order takes that decision out of our hands. It
Mm,
helps us stick to our plan.
that makes a lot of sense.
Yeah,
It's like having that predetermined exit strategy.
it is.
So we're not caught off guard when emotions run high. Yeah.
Precisely now on the greed side of things.
Okay.
A really helpful technique for staying disciplined is to conduct regular portfolio reviews.
Okay, so instead of constantly checking our investments
Right.
and reacting to like every market fluctuation,
Yeah.
we schedule dedicated time to like sit down,
No,
assess our portfolio,
exactly.
and make adjustments.
It's about taking a step back,
Okay.
looking at the data objectively,
Hmm.
making sure our investments are still aligned with our goals and our risk tolerance.
And by doing these reviews like regularly,
Mm.
say quarterly or even annually,
Mm-hmm.
we can make more like informed decisions
Yes.
rather than just reacting to that short-term noise in the market.
Exactly. And it's important to make sure we're making those decisions based on logic and data,
Right.
not on a whim or because we heard a hot tip from a friend at a party or something.
Yeah, that's where it's so easy to get caught up in that herd mentality we were talking
Oh,
about.
absolutely. And speaking of keeping emotions in check, another really helpful practice is to keep an investment journal.
An investment journal.
Yeah, have you ever heard of those?
I haven't. Tell me more.
So it's basically a log where you document your investment decisions,
Okay.
including like the rationale behind each buy or sell.
So instead of just making the trade and moving on,
Right.
we actually like take the time to reflect on why we made that decision.
Precisely. And by writing it down, we can start to identify patterns in our behavior.
Okay.
Are there certain situations where we're more prone to making emotional decisions?
Interesting.
Are we consistently chasing hot stocks or selling at the first sign of a dip?
So it's like becoming a scientist
Kinda.
of our own investment behavior.
It is.
We're observing those patterns and learning from our past choices.
Exactly. And by bringing that awareness to our decision-making process, we can start to break free from those negative patterns and make more disciplined choices.
That's really cool.
Yeah. Now remember, investing isn't just about picking the right stocks or timing the market perfectly.
Right.
It's about mastering our own psychology,
Yeah.
understanding the forces that can cloud our judgment,
Totally.
and developing strategies to overcome them.
It's like we're building this mental toolkit
Yes.
for navigating the financial landscape.
That's a good way to put it.
We're equipped with the knowledge and self-awareness to make smarter decisions.
Exactly. And one of the most important things to remember is that every investor, no matter how experienced, is susceptible to these emotional biases.
So even seasoned professionals
Oh, yeah.
can fall prey to fear and greed.
Absolutely. It's part of being human.
Right.
But the difference is that experienced investors have developed strategies for recognizing and managing those emotions,
Okay.
so they don't derail their long-term goals.
And those are the strategies that we're like exploring today.
That's right.
Tools and techniques that anyone can use to become more disciplined and emotionally intelligent investors.
Precisely, it's about empowering ourselves to make decisions that align with our long-term goals, not letting fear and greed dictate our actions.
Okay, so we've covered a lot of ground today.
We have.
We talked about how fear and greed can drive market trends,
Mm-hmm.
how our own psychological biases can sabotage our financial goals.
Right.
And we've explored some practical strategies for recognizing and overcoming these emotional pitfalls.
Yes.
As we wrap up this deep dive, I'm curious,
Yeah.
what's like the one key message you want our listeners to take away from this conversation?
Yeah, it really is like it highlights how intertwined those two things are, right?
Totally.
The big swings we see in the markets,
Yeah,
they're often just a reflection of our collective emotions.
exactly. And that's why like understanding those emotions, both on like a market level, but also like within ourselves
Yes.
is so crucial for making those sound investment decisions.
Absolutely. If I had to like boil it down
Yeah.
to one key takeaway, it would be this.
Okay.
You have more control over your financial destiny than you might realize.
I love that.
Yeah.
It's so empowering.
It is. I mean, look, the market is unpredictable,
Right.
and there will always be like those external factors that we can't control.
Sure.
But by understanding and managing our own emotional responses,
Okay.
we can navigate those uncertainties with more confidence
Hmm.
and make decisions that really align with our long-term goals.
It's about like taking ownership, right?
It is.
Not letting fear or greed call the shots.
Exactly. And remember, investing is a journey,
Yeah.
not a destination.
Not a sprint, it's a marathon.
It is. There will be ups and downs along the way,
For sure.
but with the right mindset and the tools we've discussed today,
Yeah.
you can not only like survive those fluctuations, but
Yeah.
actually thrive.
So before you jump into your next buy or sell, just take a moment, pause,
Yeah.
ask yourself, is this decision coming from a place of logic and strategy? Or is it fear or greed whispering in my ear?
It's such a powerful question to ask ourselves.
Fully.
And to really make it hit home, think back to your own investment journey.
Mm-hmm.
Have there been times when you let fear or greed kind of get the best of you?
Oh, yeah.
And what did you learn from those experiences?
It's so valuable to reflect on those moments.
It is.
Even if they're a bit cringeworthy,
Yeah,
they hold like such important lessons.
they absolutely do, because once we recognize those patterns, we
Yeah.
can start to break free from them.
Yeah.
We can become more disciplined,
Mm.
more emotionally intelligent investors.
So to our listeners, as you continue on your own investment journeys, remember, knowledge is power.
Yes?
Discipline is key.
Absolutely.
And a long-term perspective is your greatest asset.
Couldn't agree more.
Don't let fear and greed steal your financial dreams.
That's right.
And never stop learning.
Deep learning.
Never stop questioning.
Ask those questions.
And never underestimate the power of mastering your own mindset.
Your mindset is everything.
That's a wrap on this deep dive into the psychology of investing.
That was
We hope you've gained some valuable insights and tools to help you navigate the markets with confidence and achieve your financial goals.
absolutely. And remember, investing is a journey best taken with both your head and your heart in the game.
We'll catch you next time for another fascinating exploration of the forces that shape our world.
See you then.